A very good afternoon
growth
and welcome to Unit Jam. Odair, Ryan, Wissam. Hey Ryan.
Eurozone growth seen at 1.2% versus 1% in the previous forecast.
Good to see you all.
With 2026,
we're risk off today.
Down from 1.2% seen in July. And Japan growth
welcome.
1%, up from the 0.7% seen in July. 2026 growth expected at 0.6 versus the prior 0.5. And regarding global headline inflation, IMF expects that to decline to 4.2% this year and 3.7% in 2026.
Okay, folks, let's get into the session straight away. Let me just make sure I'm showing the right script. Yes, I am. That's great. Right, we're risk off. Clearly, if you look at the futures market, you can see that everything has turned lower, right? S&P, Dow, NASDAQ. And this is on the headline that Beijing's imposed limits on 5 US units that are linked to a South Korean shipbuilder, and they threaten more retaliation. So it's China upping the ante. Now, the base case is that this is going to fade and that the November the 1st trade truce will be extended, but all the Mag 7 stocks were slipping in pre-market trading, and if you look, European indices are lower as well, volatility elevated. On top of that, we've seen a safe haven move into bonds, right? You've got 10-year treasury yields as low as 4% at one stage. So a big bid coming to the bond market. That's what investors do when they're worried. They move out of equities into bonds, and you can see here bonds across the board being bid. That's undeniable. And we've seen stock commodities lower, right? Typical risk off trading: gold, copper, silver. I've closed my copper longs now because I don't mind buying in again if we a deeper dip. I'm just taking profit in where we've got, because this, look at the way it's kind of potentially, look, this has got the feel of like the final flush higher and then it's just collapses lower. It's got that kind of feel to it. See the way we've got this big flush higher in gold, then a pullback. Silver, big flush higher, then a pullback. WTI, Brent crude, everything flushing lower, right? Risk off trading, investors moving out of commodities, and look at the dollar pushing up. Now, one point that's interesting here, the dollar, I'm still expecting dollar weakness, but I saw an interesting piece by ING and I found it persuasive. It's that the dollar bears are just stepping aside in the absence of US data. There is no further evidence of the US labor market slowing down, so dollar bears aren't stepping in, they're just sort of stepping aside, and that's allowing some of that dollar strength to come in. And reassuringly, we're seeing dollar being bid on risk-off trading as well, right? So that's a sign. And you're seeing the yen, the Swiss franc. Like, this is a typical currency move. Dollar, Swiss franc, Japanese yen strongest, Aussie, New Zealand dollar weakest currencies of the session, right? So this is your trademark risk-off trading. This is what risk-off trading looks like, and we can see here that dollar strength is just being seen across the board, right? And you can see it's weighing across all the majors. Now, I'm basically stepping aside from FX markets, etc., etc. I'm still with my Deutsche Bank longs on, more out of technically it's very sound, so I'm just going to leave the Deutsche Bank longs to play out, for better or for worse. I quite like the support level that it's at. So it's just holding above that 50 exponential moving average. And broadly speaking, with the ECB, I'm expecting them to stop cutting interest rates. And I am expecting euro dollar to gain over the medium term. So we'll see where we go with that. But either way, I'm just happy to hold on to that for now. So that's the kind of big picture outlook. We've got earnings season starting off. So we have earnings today. We have had some decent earnings out of JP Morgan. And Goldman Sachs slipped lower despite having record third quarter sales. General Motors took a hit with a big slowdown from electric vehicle demand. You've got, we're becoming into some big names. So earnings season is really kicking off now in earnest. So that's something to look out for moving into this week and into next week. In terms of the calendar, we had data out of the UK. Yes, it was slightly weaker data, but mixed. You see the average earnings still high, 5%. That's not really in keeping with a 2% target for the Bank of England, and no major shift in expectations on interest rates from the UK. There is an absence of data here for the US. We've got Bowman speaking at 1:45. We've got Powell speaking at 5:20, but without any data, since it was that weak ADP print, wasn't it, that we had a couple of weeks back, and Wallace speaking later. So those Fed speakers should move markets, but for now it's the risk-off trading, and that's the focus. So looking at the S&P 500, let's just zoom here, right? And what do we see? Well, we've seen this sharp sell-off, right? We've seen a move to try to hold this trend line, and now we're seeing another sell-off. So if you look at this here, technically what you're expecting is something like this, right? Now, it is true, right? We can get a false break of this area and we find dip buying coming back in, right? That is true. So what we're looking for, really, I'm expecting sellers to probably test this level again, the 6550. We've got a standard deviation here at 6514, so that's going to be interesting to look at. But sentiment is negative. We'll keep an eye on sentiment. If you look at the VIX, where are we? Look at the VIX here. You see, it's elevated. So I am expecting probably this kind of reaction. So I'm favoring selling today. On balance, volume is moving lower. We just kind of, and that's such a sharp sell-off, isn't it? You know, that day of selling essentially erased buying from 11th of September. So that's a month worth of gain out in one day. And that's a good illustration how financial markets, what do? They go up the stairs, but they go down the elevator. In other words, they step up slowly, but then they drop quickly. And that's just a good example of that, sentiment in action. So we're not trying to catch a falling knife here. Yes, we could look at some support at that region. Big support that we got marked here around that 6550. But otherwise, expecting sellers to keep coming here. Yeah, it is. Now, you know what? We were looking at, weren't we, on late on Friday. Funny day for me Friday. Maximum loss on the futures account, and then a decent gain on my CFD account. But once Trump got going, it was interesting. And I think that was a market that was wanting to sell off. And I think you said it at the time, and I think that it really was. And there's talks about stretched AI valuations, isn't there? And is the rally done? Now, if you look at the seasonals, we tend to have a strong end of year. So I don't know if this is just a flush lower and then we go into a strong end of year and then rethink again. Because have we got Fed interest rate cuts coming? Yes. Right. Are the earnings still doing okay? Yes. Right. So we're still doing all right out there. It's not like a massive slowdown. There's no major point, no data. So we'll see where we go with it. But for now, I'm looking at that sell bias. Now, having said that, right, we see on the hourly chart, we've had some buyers come in and trap some of those sellers, and we've had support on that first standard deviation, which is 6614. That's where the first standard deviation is, the S&P. So we've had that 6614 hold for now. We've got the 15-minute chart. Sellers have come in and they've trapped some of those buyers there, and the delta is negative. So, if we start seeing some of these buyers getting trapped up at this level, up at the VWAP, then it's not unreasonable to look for a little move lower. But we might see a near-term sort of shove up, followed by a sell down. Right, that's what I'm looking at. And if you look at the areas on the market profile, we are in now a value area low, right? So we're just into a value area low. So not unreasonable to look for sellers up at that VWAP. I find that totally fine, right? Something up at that VWAP, and on the 15-minute, I wouldn't be surprised if we see sellers here. If we look at from the European session, what have we been seeing? Sell, 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 right? Yes, we've had some near-term buyers step in here. We've had that dip push higher, but I'd expect these sellers to regain their momentum. That's what I'm kind of looking for. And the big picture stuff, I'm expecting sellers from that VWAP. That doesn't seem at all, right? Now, and I'll just stick with that big picture, and then from that big picture, we'll see how we get when we get to the open. But that's my sort of hypothesis for the day.
For to say he is open to debate and compromise.
I think what would change it is if we get back above the 6661, right, then we're going back that direction, and on the big picture, we're going back to retest the highs. But for now, I favor further selling. Now, if we have a sort of a sell day like that, then I expect a retracement up there anyway. So at the moment, we're breaking down through here. So I'm looking for moves lower, up, and then down. And if we get a close like that, sort of underneath that area, then I expect the same. So at the moment, it's a seller's market. Cumulative delta is lower as well, right? We've been drifting lower all session, and we find sellers on the first standard deviation pretty much all session. If we get those buyers trapped, then there could be a little run down to 6605. Don't see that being unreasonable. Now, only one thing to be aware of today is volatility's increased. You can see here, this candle height here is from 6637, right, to 6617. So that's a 20-point candle on the 15-minute chart. So I'm going to be dropping down to micros so that I manage risk and I'm not amplifying my risk massively, okay, by suddenly much more risk than I want to. Okay, folks, that is it for now, and I'll be back for the open just before 2:30. Got 19 seconds. At the moment, we've still got this near-term buyers trapping sellers trying to push up here, so it may be looking for a sell off the VWAP is more attractive. And you can see on the 5-minute, okay, those buyers don't look like they're getting trapped. Let's have a look. Moot point whether they get trapped or not. It's a bit tricky to see. So looking for a sell off the 6648.
More from French PM in the corner says the New Caledonia statute will be discussed before year end.
Volatility is still elevated. Points controls there. That's not a bad area as well. That S1. Quite decent. It's that value area low region from yesterday. S1 pivot point up to there, then potentially look for selling. Yeah. Yeah, it's kind of like a smaller version, isn't it, of that Dow setup we saw. That coiling area. 1 minute 33 to the break. Now, if we get buyers trapped there or here, then that looks like it's going to take a go lower. Okay. Okay, so the 5 minute sellers are trapping buyers here, 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 and here. So it looks like we want to break lower. So here we go, 5 minute sellers here, trapping all these buyers from here. Right, so a point of control return could look good for more selling. Standard deviation just being hit. Sellers have trapped buyers there. So near-term momentum's turned lower. From the cumulative delta is pushing lower. We know we want to go lower. Only tricky thing is we're heading into some support here at the S2. So would prefer something like this. Now, so let's see. If we get a little drop underneath there, could be worth just seeing if we get something. Get under there, we could have a little run. Yeah, I might just see if I can get a little run on that. Yeah, and have another little go at that. Just see if you get a little move. That's a bit of a potential break of that little area. Just trying to break out that little pattern. Nice. That's it. See if we can keep going. That's it. Nice bit of delta coming in there. Yeah, that's nice. Yes, that's a 5 minute, looking to go down to these lows. That's nice. And we're breaking out to that standard deviation, so maintaining those shorts. If we can get back underneath there. It's another 5 minute. Now, is that trapping those buyers there? If it does, then you can look for another seller against the standard deviation. That would be the trade. Let's have a look. So we're now into that standard deviation. Let's see if we get a move down underneath that area. That's what I'm looking for. Quite a lot of delta came in there. We're looking to add to shorts if it's relevant. It's looking like it's going to close. Okay, so these sellers, a lot of volume, trapping those buyers. So that's suitable to go another short under this area. Let's see what happens. Let's see if folks get trapped here. There we go. All right, so I've got another short there. Okay. Still keeping the shorts here. Okay, single print area filled. So we've got a 5 minute move lower. Let's see if we get a bit more. Got 15 minute looking to try to break. Got a lot of delta here. You know, a lot of sellers came in here. Now we're back on that point of control. Right, let's see if we go under. Okay, that's good. Now we're moving in the right direction. That's good.
Update from IMF's Run Chaz says China has still a lot of non-performing loans in property sector. Says in China, domestic demand has been weak for some time due to property bust.
All right. All right, let's see if we go under this area. Okay, sellers trying to come in again. Come on, boys. Push it down. There we go. Bit of extra volume. Very nice. There we go. Okay, we're moving lower now into that value area low. Come on, keep it coming.
Just more commentary at the IMF. It says China needs to rebalance growth model towards domestic demand.
Okay, now we've got another
Just an update here from the Italian auto parts lobby. They say the new China rare earth metals curbs could have significant impact due to low levels of reserves. Says the industry had a buffer during last supply block in summer. Says that is not there anymore.
Okay, it's a 5-minute close coming up. That's very nice. Okay. Still holding. Still holding. Still holding.
Just a quick market update as we look at US markets. Since the cash open, we have seen equity futures take another leg lower. On the cash front, S&P 500 down 1.5%, Nasdaq 100 down 2%. Does follow the most recent overnight moves by China, standing strong against Trump. Transport Ministry says it opened investigation.
Okay, I've taken them all off.
301 tariff impact on the shipping industry, and the trade front, China's Commerce Ministry says it's taking countermeasures against 5 US-linked firms. In terms of sectors, we are mostly in the red.
Really, I should have held that back.
Real estate stable.
Profit's a profit, right?
In terms of some of the financial earnings reports, Wells Fargo outperforms Goldman Sachs. That lags in the red. Dollar index, that's little changed. Strength, modest strength in the Japanese.
We're through that standard deviation, 6614.
And then elsewhere, cash treasuries in the US have returned with upside seen across the curve, particularly on the belly.
Now, what I'm looking for here is to try to get back in again.
For the day, for the speakers, a discount rate minutes.
So 15
is set to speak in the afternoon.
Is here, opening range. Pull back to that standard deviation here, right? With those buyers trapped, I can look for potential sellers again from that point of control. Okay. Gotta be careful because we are in a value area low on the daily, right? So I'll see if I can get back in here.